S&P Global is out with its list of the top environmental, social, and governance trends to watch this year. Joining me now to talk about it is Martina Chueng. She is president of S&P Global Market Intelligence. Martina, good to see you again. Before we get to the big trends, I saw this in the report, and I was a little startled. You said about 90% of companies in the S&P 500 publish sustainability reports, but only 16% have reference to ESG factors in their filings. That seems pretty mismatched to me. What does that tell you?
Thanks, Alexis. It's great to be here. You know, it's an indication of how the perspective on sustainability is evolving, and it's getting very much more metrics driven, and that's what you'll see in the 16% of companies who have made reference to specific ESG factors. We're going to see that increase dramatically over the next several years, but it's not uncommon. We've also seen it in the 1,500 companies or so that are reporting on TCFD, which is the Task Force on Climate-Related Financial Disclosures, where there are metrics and specificity, but the consistency of how the framework is applied can vary across sectors and even for companies within a sector. But we expect that to grow quite a bit and to improve.
So I guess that's probably one of the trends you're seeing, right, is data improvement going forward. Talk to me about, now that we have the new administration, the last time we spoke, this was before the election, we were talking about what the new administration would mean for ESG. I know these are still the early days of the Biden administration, but what are you seeing so far?
Yeah, it's all eyes on the U.S. administration, not just within the U.S. but across the globe, really. And first major step was, of course, re-signing to the Paris Accord and the announcement of a very ambitious and comprehensive climate and environmental plan. So this is very powerful, both within the United States, which will, require the administration to undertake quite a bit of action to reduce emissions in line with the Paris Agreement. But globally, we now have 2/3 of the global economy with the United States committed to a net zero or carbon neutral target by 2060. And so this begins to get, very much more aligned with how other economies and other companies internationally are thinking about this.
I know another trend you saw in the report was that conversations about energy transition are going to become more nuanced, you said, over the next year or so. What do you mean by that?
Well, energy transition is often something that people think about in reference to the energy sector. So decarbonizing the electricity grid, the transition from fossil fuels to renewable energy, for example. But in fact, energy transition is a concept that's going to impact all industries, all sectors. And the reason for that is that in order for economies to move to lower carbon emissions, every company has a role to play in that, whether it's the company's direct carbon footprint or whether it's the company's supply chain, for example. And so we're seeing the detail and thinking around energy transition maturing into something that is really much more cross-sector, all the parts of the economy coming together to achieve carbon emission reductions, and not just companies specifically within the energy sector.
And I know that you also see threats to nature and biodiversity, particularly taking center stage this year. What should investors be looking out for there?
It took me a while to have the TCFD, Task Force on Climate-Related Financial Disclosures, roll off the tongue, and now we're getting ready for TNFD, where N stands for nature, and this is something that's really exploding. And by some estimates, if we continue the path that we're on with regards to damage to biodiversity, we could be looking at about $10 trillion in value drain from the global economy by 2050. It's something that regulators and policymakers are paying attention to. It's also something that the private sector is paying attention to. And our expectation is that we'll see a lot more companies making statements around how they think about biodiversity beyond the number today, which is reasonably low. And we also would expect to see more attention being paid to this, whether it's through public infrastructure and policymakers more broadly.
What about social issues? I mean, putting climate aside for a moment, what are some of the social issues that investors are going to be watching and watching to see if the companies they're interested in investing in are actually giving it the time of day?
Yeah, well, overall, we've seen massive growth in sustainable bonds, which is one indicator of investor interest in this, including social bonds, which took a massive increase last year. So year-on-year sustainable bond growth in the region of about 50% overall, and specifically around social, it can take a variety of lenses. So certainly one lens is gender diversity, pay equity. And we are seeing many more companies disclosing on those factors. And there's a material financial impact on that. We know that companies that have more diversity in their leadership teams, for example, from a gender standpoint, perform better. Those are based on analysis that we've conducted at Market Intelligence over the last 2 years. But we would also expect to see more in terms of social impact on communities. And we think that's going to be something that's going to take, a bit of an increase, as well as we've seen a lot of companies making statements and commitments following some of the challenges that we've seen in the last year, whether it's with respect to social inequity, movements such as Black Lives Matter movement, which have really catalyzed some of these topics to the top of the list.
Well, lots of ESG trends for us to be following for sure. Martina Chueng of S&P Global, thanks so much for being with us.
Thanks so much, Alexis.